Securities offered through TJ Stearns, a registered representative of Crown Capital Securities LP, member FINRA SIPC. Content is intended to provide accurate information, however, is not intended as financial, tax, or legal advice. Please consult a financial, legal, or tax professional for specific information regarding your individual situation. Opinions expressed and provided are for general informational purposes only and should not be considered a solicitation for the purchase or sale of any security.
Welcome to Protect and Grow with Chicagoland certified financial planner Tim Stearns of TJ Stearns Incorporated. Trust, respect, and results. TJ Stearns Incorporated focuses on comprehensive financial planning and benefits.
And welcome into the program. This is Protect and Grow Chicagoland Retirement with Chicagoland's CFP certified financial planner Tim Stearns here with us. Tim, always a pleasure.
Peter, thanks for having me.
Tim, we are glad that you are here providing the guidance, the insight, the perspective that Chicagoland area savers and investors need in order to achieve our financial and retirement goals. And you always have some excellent resources and information for us. You've got that book, Income Allocation. You've got your courses, Rethink Retirement. Now that things are opening back up, a lot of people interested in coming and attending some of your courses that you've had recently.
Yes, it's been really great. We've been really blessed that we can have people in the classroom in person, but I also offer Zooms to people. I've had a lot of clients or prospects choose that as well, but either way, they're getting a great education and it goes to a non-for-profit that we sponsor. And, people have a lot of takeaways from it. We cover Social Security, Medicare, portfolios, insurance. You name something that you're going to need to understand during your retirement years, we cover it.
There are a lot of things we're going to need to understand for our retirement years, but as always, ladies and gentlemen, if you need a better understanding of any of those important issues, pick up the phone, give a call. Tim Stearns offers those resources to you. Today, we're going to be talking about yet another resource, this checklist, 12 questions to know if you're prepared to retire. So if you'd like that book, Income Allocation, if you'd like to attend one of the upcoming Rethink Retirement courses, if you'd like this full checklist of the 12 questions to know if you're prepared, or if you would like your individual Protect and Grow plan, a specific plan that's customized to you and your situation of the steps that you should take in order to achieve your financial goals in the future, pick up the phone, give TJ Stearns Inc. a call, 800-640-2256. That's 800-640-2256, 800-640-2256. Again, 800-640-2256. Now, Tim, this report, this list of 12 questions, I really think this does cover a lot of the gamut of the issues that people may not have previously considered as they are thinking that, hey, one day I would like to retire, or maybe even if they are already retired, some of these still might not be addressed.
Right. I mean, one of the first things that they bring up, and again, we'll get this to anybody that wants it via email, but do you know how long you'll be able to generate the income you need if your paycheck stopped today? And that, people always come in here and ask, oh, do I have enough money for retirement? The quick answer is I don't know, because you need to go through it and see really what it's about is paying your bills and having an income that you don't outlive, that moves up with inflation, et cetera. A lot of people, they have an idea of what their budget is. They think it's going to be totally different in retirement. And sometimes it is, but a lot of times, it's going to be the same cost of living, so, have you identified and calculate your retirement income gap? And what I mean by that is, what do you need to make you the Smith family's house run? Okay, let's use a made up name. What do you need for them to be able to pay their bills? You minus out what their Social Security is, and if they're lucky enough to still have a pension, and you're going to find your income gap. Now, how do you solve for that? It's literally an algebra problem, and that income allocation software that we have will tell you exactly how to get there, so that that you're having an income coming in to pay the bills.
Well, I like the rest of this list of questions is specifically geared to that retirement time frame, but I find it interesting how the first question was worded, Tim, because really I think this tips its cap to and really alludes to the fact that we need to be prepared at any phase in our financial life for that paycheck to disappear. And a lot of people saw that during COVID, unfortunately. A lot of people saw that during the Great Recession. It seems to come along unexpected and probably Murphy's Law at the worst possible time that we lose our ability to produce an income, setting back our goals for that eventual retirement. So at any point during our lifespan, we really need to have an answer to that number one question. Do you know how long you would be able to fill the gap, to generate the income you you need if your paycheck stopped today? And certainly, Tim, as we are planning and preparing for retirement, we need to have a very concrete answer to that question.
Right. And the analogy I used with some people the other day in our office is, if I was a contractor and I came to you and I said, I want to redo your kitchen, let's say, and you said, oh, do you have a plan for that? Do you have a blueprints, et cetera? And I said, no, we're just going to kind of wing it.
No, but I've got the best cabinets ever.
Right. Yeah. Right. No, but you literally see people doing this in retirement. I just think that's crazy to wing it in retirement when you're having 30+ year retirements for a husband and wife. And one of the biggest threats to a retirement is longevity risk, which goes back to question number one. How long will you be able to generate that money? Is it only 20 years? Then you have an issue. And how do you make things go longer or, go farther with the dollar than they currently are? Well, that's from an income allocation plan.
Well, and during our young working career, Tim, it's been suggested by many in the financial world that we should have at least 3 months kind of saved up and built up in an emergency account. That would be our answer to that question at certain phases. But then again, if we have some more long-term kind of issue, a disability come along, a long-term layoff, maybe we need to have an answer for a little bit longer period of time. How would we generate income if that stoppage of paycheck went beyond the 3-month period? And certainly as we are preparing for what could be 30 years of unemployment that we look forward to, we fondly refer to as retirement, we need to have an answer to that. And the rest of these questions really go into the process of how to answer and address that retirement related stoppage of our paycheck, because the day after we retire, Tim, it's not that we don't need a paycheck, it's that we don't have one, and we need to figure out how to recreate it. So number 2, you hit on that. Have you identified and calculated your retirement income gap? Here's where the rubber meets the road. This is the math of planning for retirement.
Exactly. And we have to get through 30+ years. How do you do that? The other thing is you want to make sure that you're taking care of your husband or wife, to make sure if something happens to you that, you're still able to pay bills. How many times have you seen a widow or a widower have to move out of their neighborhood because they just don't have it anymore? One of the Social Securities has dropped off, the pension's gone, what have you, because one of the spouses has passed. These are an income allocation plan will take care of both parties. Hopefully they're both still around, but if they're not, the income plan makes sure that we're moving up with inflation and then we're not losing, extraordinary amounts of income if something happens to one of them.
Now, Tim, you've mentioned income allocation a couple times in the program already. This is a very specific model. It's how we structure the assets in retirement. It is different than the traditional asset allocation that most investors probably know and are familiar with and are probably actually utilizing. You make a book available that can get people started in their understanding of why income allocation is different and why income allocation is needed and in fact, in many cases, superior to the asset allocation for the retirement phase of our lives.
Right. And basically what we're doing is making sure that anyone over $500,000 worth of assets, we'll get the book into their hands. We have a digital version. We also have a hard copy, but it's a book by one of my friends, David Gaylor, and it's an outstanding book. It really spells it out in layman's terms to understand exactly how to try to have that ideal retirement.
Well, if you would like a copy of Income Allocation, pick up the phone, give a call now. Tim Stearns making 10 copies of that book available. If you've got at least $500,000 saved for retirement, this book is for you. And the strategies discussed and described in the book, they are best suited for those with $500,000 or above saved for retirement. We'll get into a little bit more of why that may be in just a moment, but they work best if you meet that criteria. If you do, pick up the phone right now. This retirement planning strategy guidebook is being used across the country by advisors looking to help their clients, savers and investors who have been serious about planning for their financial future and want to retire with confidence, to learn how to structure those assets, to learn how to address some of retirement's biggest risks. That is what income allocation is all about. Give a call now and request your copy, 800-640-2256. That's 800-640-2256, 800-640-2256. And Tim, the number 3 question really is, in part, why it's best suited for those with $500,000 or above, because we are trying to solve one problem and then identify what we can do with the rest of our money. And number 3, do you know how much you will have available in discretionary assets above what you will need to generate income? And this is really kind of an important part of the process as well. We want to continue investment for growth, but we've got to address that need for income first and foremost.
Right. So, I mean, basically the discretionary income or assets, I'll say, we call it a growth bucket. It's the same meaning. Basically, you have to have a bucket that has maybe some stop losses in it, something that you can't lose more than 5 to 10% in, but you need growth to keep up with inflation. And so the Fed has said that they're going to rank around 2.5%. Well, that's what we need to make sure that we're growing the dollars by at least that amount so that we're not dipping into principal. But, how much do you have to generate the money? We have to determine that. When we're doing plans, we do them very conservatively, under promise, over perform is what we try to do.
Not the experience most investors have had, by the way, unfortunately.
No. And these illustrations, people will come in here with them. I don't really understand them because the market doesn't go up 8 to 10 to 12% every year in and year out. That's not a thing. And that's not fair. Every 7 years, at least, we have a correction. And I always say to the client, it's great that you did last year, but are you prepared to lose 50%? And they go, what do you mean by that? And I said, well, through 2000 through 2009, that's what this portfolio did when we analyze it. And they're taken aback by that. And I say to them, well, that's over 12 years ago. Things are a little different now. You're getting ready to retire. So how do we make things last? And you have a finite amount of money because you have a 401k, no pension. We need to make sure that dollar stretches.
Well, again, if you would like that book, Income Allocation, if you would like to learn the mathematical process of structuring the assets for retirement that can help you differentiate and identify what is needed for your baseline income and what is left over and above that for discretionary purposes that you can continue to take higher amounts of investment risk with and shoot for those higher returns. That is your security blanket or your ability to spend on the things that you always envisioned retirement to be about. Pick up the phone, give a call for that one-on-one planning strategy session and that protect and grow plan, or just to get started with the book, Income Allocation. 800-640-2256. That's 800-640-2256. 800-640-2256. And Tim, before the program, you were sharing this chart with me of these 14 different downturns that have occurred since the Great Depression. And this is almost 100 years ago now, on average every 7 years. And the average downturn was just about 40%. That's how much the market lost during each of these declines on average. Meaning that if our retirement is 30 to 35 years, we are probably going to experience 3, 4, 5 of these downturns. That's just what has happened over history. And, history does not repeat itself. We can't guarantee that based on past performance, but that's what the market has done over the last 100 years. And it's likely that we can expect to see some regular market cycles and those kind of events continue to happen into the future. Now, the average retiree, Tim, doesn't have that paycheck coming in, has to create their own income from their portfolio. They probably don't want to see 3 or 4 or 5 different instances where their portfolio value loses 30 to 40 to 50%. They just can't stomach that.
Right. And that leads me to another point on this. Do you know if your portfolio is properly diversified to provide enough growth, safety, liquidity, and income? And, last March, a lot of people, had a gut check time, they saw the market go down. Well, luckily the Fed has propped up the stock market by printing untold amounts of money, which is scary, but that's what has kind of propelled this market. You look around, not a lot has changed. People are getting healthy again and they're getting their vaccinations, but I don't think the economy is much better than it was even a year ago.
There may be more pressures on it now, Tim, than there were before the pandemic.
I would agree. And that's why, you have companies going out of business that have been around for 30, 40 years, so these are things that we're cognizant of. You need to make sure you're diversified. 12-year bull market. I met with a lady last week and she had over 90%. She just took a buyout for AT&T and she had over 90% of her money in stocks and she's not going to work ever again, according to her. And I said, what would you do if there's a downturn in the market? Oh my gosh, I might have to go get a job. Well, that's not what we're here to do. We're going to solve that problem. But I asked her, do you have stop losses? Mutual funds don't have that. And she was in the rank and file 401k that she had that lost a lot of money in 2007 through 2009, and then the 2000s through 2002. That brings me back to the point we always bring up. Asset allocation has burned us 5 times in the last 21 years. Why do we continue to do it? I don't understand investors.
Well, that's why we need to learn about these newer strategies, about income allocation, something that has been proven to hold steady and provide more confidence even in those volatile times in the market, even as other investors may be losing value and we're seeing those downturns, something that can provide us the reliability of durable income throughout retirement. That is what lifestyle is based on, ladies and gentlemen, and it's really the predominant priority in retirement, to make sure that we've got the income to support our lifestyle, to pay our bills and expenses, and to provide for our needs and wants. And that's what the concept behind income allocation is. It's a focus first and foremost on creating that income rather than rates of return, which come with a lot of risk associated with them. You need to learn about this. And again, if you have over $500,000 saved for retirement, Tim Stearns has 10 copies of the book, Income Allocation. Pick up the phone, give a call now, request your copy. You can get it digitally, emailed to you out almost instantly. And if you prefer that physical copy in your hands, if you like reading the physical book, he can mail that out to you as well. And as the next step, invite you in if you'd like to structure your own personal income allocation plan. But to get started with the book, just call 800-640-2256. That's 800-640-2256. Tim, you mentioned that a lot of people hadn't changed strategies in quite some time. Here's another one on this list, number 5. Do you hold at least annual reviews of your plan to assess if you have met previous goals and to set new goals and benchmarks, even in the midst of the COVID pandemic and all the turbulence that went on with that? Tim, a lot of people never heard from their advisor, never got the guidance of what to do with their money as things were moving volatile. And perhaps the correct answer was to stay still, let it set and do nothing. But that should be discussed with our advisor. And if we've got that relationship, we should be able to expect that kind of communication.
Exactly. And I ask people in our classes all the time, by a show of hands, how many people had outbound phone calls from their 401k provider, their advisors? A lot of people just put their head in the sand, and they didn't want to address it, and they're not making the outbound phone calls and putting people's fears aside. They're just not addressing it and servicing it. And when you're in a mutual fund that dipped 24% on average last March in 1 month, that's got to be cause for something needs to change. And if you haven't done that yet, then shame on you.
Well, again, if you would like to have that kind of relationship with an advisor, a certified financial planner, a CFP with that fiduciary responsibility to your best interest, it's a moral, ethical, legal obligation to make sure that the priorities of you, the client, are put as the first and foremost motivation whenever making recommendations. That's what a lot of people think they have. That's what a lot of people would expect, but it's actually not what a lot of people have with a relationship with their investments or their financial professional, but it is what you should have. And if you'd like that, pick up the phone and give a call. Tim Stearns is a certified financial planner, CFP, and he will help you design your plan, that Protect and Grow plan. 800-640-2256, the number to call, 800-640-2256. Tim, we touched on this last week. Kiplinger had an article of the 7 questions that you cannot retire until you have an answer to, and you've got it on your list of questions as well. Have you formulated a plan for how to use Social Security to maximize income and protect your personal assets? Now, they worded it in a slightly different way, but you've been offering this report for quite some time before that article even came out. I think that the fact that they repeated the same sentiment says that this is probably a pretty important question.
I think people need to all run a Social Security report and see kind of where they're at. I mean, do they go early at age 62? Do they wait till their full retirement age? Do they wait until age 70 and, let it grow at 8% a year? It all depends on each person's situation, but the report, I love the report because it literally gets you down to the pennies as to what you might be leaving on the table or what you're grabbing. And that helps people understand it because, I had a gentleman here the other day from the radio show that's very smart, just sold his company. And he had no idea how Social Security worked. I mean, he knew a cursory idea of it, but he had never had a report run. And we showed him exactly the best way to do it, and then built him an income allocation plan on top of that.
Well, again, I don't think we can talk about retirement income without mentioning Social Security, but it's not a cut and dry case of how and when to claim and collect that. You've got to use it as a tool and as a component of that total income plan. And oh, by the way, the more you get from Social Security, the less stress and strain and reliance you place on your personal assets. So Tim, well worth the time to come in and get that report and that analysis and maximize that. That can make the difference in several hundreds of thousands of dollars over the lifetime of the average couple.
Absolutely. And I don't think people realize the power of that. So when we run the report, they'll see it right off the bat. I mean, it's really nice and succinct.
Only a few minutes left in this segment of the program, Tim, and I know we're not going to have time to get to all of the questions on your list of these 12 questions to know how prepared you are for retirement. Are you ready to retire? But you also do make this complete list of questions available. If anyone wants to go over it on their own, or maybe with their spouse or their family or their loved ones, friends or neighbors, if they've got a coworker that's been mentioning that they are thinking about retiring, they'd probably appreciate this list as well. Folks can call in and request this list. You can email that right out to them, right?
Yep, absolutely. Happy to do it. I think it's, we also have some other things. Eight moments to move when you should be moving your money. And then lastly, the 10 steps to prepare for retirement. It's a lot of planning that goes in there, and you want to make sure you do it right so you don't have to go back to work or run out of money.
And Tim, those 10 steps to prepare for retirement, that report sort of details the math behind number 2, right? Have you identified and calculated the retirement income gap?
Goes hand in hand. It's outstanding.
Number 9 on this list, I think is somewhat of a myth or a misnomer. Tim, do you know how much cash flow your portfolio will need to generate in order to meet your retirement needs? A lot of people say, hey, I'm only going to need 70% of my retirement income. Now, that might be a gross misestimation in many cases.
Oh, I definitely think that. When we do budgeting for people, we make sure that they got down to brass tacks so we know exactly what they're spending. And not a lot changes in retirement. You might, we've talked about this before. You might buy less work clothes, but every day is a Saturday. You might be spending more money out for dinners and that type of thing, or doing all that traveling you never got to do when you were working. It kind of comes out in the wash, but you just see that people are spending about the same amounts. And I'll also say this, our lovely state government, we don't, the property taxes don't go down once you're retired, they're still up there. So we all these different, bills aren't going to change drastically by any stretch.
Now, speaking of taxes, Tim, number 11 on your list here, tips its cap to that. Do you understand how much you will be paying in taxes in retirement and how much of your retirement account withdrawals you will actually get to keep? With all the talk in the language right now, Tim, is that sort of up in the air? Is there anything we can do to prepare for the possibility of higher taxes into the future?
I'd follow the news because there's a lot of things that are about to shake loose, a lot of moving parts. They've talked about getting rid of the step-up basis for stocks and that type of thing, maybe the family's owned stock for a long time. They've talked about taxing all the way down to $3 million and above, those estate taxes. That would hurt a lot of different upper middle class people. So these are all things that we talk about and we're always following because as a fiduciary, continuing education, we do it every year. So we need to know exactly what's going on. And there again, we have our CPA on staff and he does a great job of making sure that we're all on the same page.
Yeah, estate taxes, capital gains taxes, stepped up cost basis, just regular old income taxes. The
Absolutely.
Secure Act changed how IRAs get taxed and distributed. So a whole bunch is shaking there, as Tim said. And you may want to pay attention, but you also may need to want to do some proactive planning. And through that proactive planning, you can help to control your tax liability. Even if some of those laws do change into the future, you can strategize now under the current set of laws on how to pay the least amount possible, how to minimize, reduce, sometimes even eliminate unnecessary taxes, keep more of your money. And if you'd like to see those strategies and identify what could help you leverage your money, be more efficient and optimal with it, pick up the phone, give a call. That is part of that Protect and Grow plan. That's probably more on the protect side. There are times when growth is important. There's times when we just need to protect what we have, but it's all part of that plan. And Tim Stearns, a certified financial planner, happy to help you put that together, get that put together with you and for you. No cost, no obligation, but similar plans can easily go upwards of $1,000 to several thousands of dollars for the help and assistance of a certified financial planner. So give a call now. You can also receive a copy of that book, Income Allocation, 800-640-2256. That's 800-640-2256. Tim, one of the final questions on the list of 12 important questions. This one may be the most important, not to diminish from any of the others, but do you have a retirement income allocation plan in writing? This is really, this is paramount to retirement success and confidence.
I think about 95% of the United States doesn't have this. And I think this is so important. I mean, you know, not having a plan is having a plan, right? As they say. And I think that this is absolutely imperative that you have to have a written plan to get through 30+ year retirement. And we're happy to help people get through that.
Well, if you would like to get your plan, if you'd like to get the book, if you'd like to get this list of questions, if you'd like to attend one of the upcoming Rethink retirement classes, so many opportunities for you to learn more, become more informed, better educated, so you can make better decisions, more well thought through and informed decisions. That's what Tim Stearns really prides himself on and provides his time and assistance to help you do. Pick up the phone, give a call, 800-640-2256, 800-640-2256. Still a few copies of that book, Income Allocation, if you are one of the first 10 callers to the program or after the program with at least $500,000 saved for your retirement. This book is for you, and you can get that in your hands. So call now, 800-640-2256. That's all the time that we have for this segment of the show. Tim, we always appreciate you being here. Thank you very much.
Thanks, Peter.
Tune into Chicagoland certified financial planner Tim Stearns' full radio program on 890 WLS every Sunday at 11 a.m. and visit tjstearns.com for many valuable resources, including other great episodes of Chicagoland Retirement. Be sure to subscribe.
Securities offered through TJ Stearns, a registered representative of Crown Capital Securities LP, member FINRA SIPC. The information presented on this program is provided for informational purposes only without warranty of accuracy, completeness, or suitability for particular purpose. This program is not intended to be and does not constitute financial, investment, legal, or tax advice. This information is general in nature, not specific enough to be construed as advice. You should not make any decision based on the information presented on this program without independent consultation with an appropriately licensed professional or competent advisor. Investment in securities or the market involves a potential risk for loss of principal. Trading, therefore, may not be suitable for all listeners. Annuity guarantees are based solely on the financial strength and claims-paying ability of the issuing company. Withdrawals of growth from annuities may be taxable as ordinary income in the year it is taken. Individuals should review contracts for specific details of the product's features and costs.